In today's video, we are talking the 6 costly mistakes that federal employees make at retirement. Coming up next. Hey, my name is Mel Stubbs. I'm here on behalf of Retirement Benefits Institute, talking to federal employees about their retirement. Make sure you subscribe if you want to get more of this type of information. In today's video, we're talking about the 6 costly mistakes that federal employees make at retirement. 3 of them have to do with kind of forms you fill out, and then 3 of them have to do with planning. So let's jump right in. The first mistake people make is not understanding their service computation date. There is a service computation date for leave. There's a service computation date for retirement. Now, a lot of you have a pay stub that looks like this. And then if you see there, they have a service computation date for leave on there. Now, some people will see that and they just assume that is also their retirement service computation date. Now, for some people, it is. But for others, it's not. And if you use the wrong service computation date to figure out when to retire, you're going to have a problem. Now, there's 3 reasons why your dates might be different. Let's say you have some non-deduction service where you work for the federal government, but you didn't contribute to the system, something like that. Your dates could be different. Let's say you did some refunded service where you work for the federal government, you left, you took your money with you, then you came back. Did you pay your money back? The date could be different. Another thing is if you have military time. If you have military time, depending on whether you buy it back or you don't buy it back, your date could be different. You don't want to be basing your planning off the wrong date. So what's wrong if you have the wrong service computation date? Well, most people are trying to retire at either MRA plus 30 years or maybe 60 years old with 20 years. Well, let's say you're doing the 60 years old with 20 years. You go retire, turn your paperwork in. As they're processing it, it comes out you don't have 20 years. You got 19 and a half years. You are not eligible to retire yet. You have a problem now. You can't do that. You have to know your service computation date for retirement. It may be the same as leave. It may not be the same. You need to be on top of that date. The next costly mistake has to do with beneficiary designations. Do you have all of your beneficiaries correct? Now, in the federal system, there are 4 different beneficiary forms. If you look here, the first one, SF3102, this is how you are selecting your survivor benefit at retirement. So most of you haven't done this form yet. This form will be part of the retirement package. Make sure you have the right person on that form. The next one, SF1152, this is the unpaid compensation that goes to a beneficiary. So let's say you die in the middle of a pay period. Who's going to get your last paycheck? It's going to be the person on this form. You need to make sure it's right. Now the next one is the TSP3. This is the designation of beneficiary for your TSP account. Make sure you get this right. If you have a change in marital status, any kind of change, you need to make sure all of these beneficiary forms are done correctly. And then the last one here with the federal is SF2823, which is your FEGLI, your Federal Employee Group Life Insurance. You need to make sure you have all of these correct, just in case something happens to you. Now, there's also beneficiary forms on the outside, not involving the government. You've got traditional IRAs and Roth IRAs. You need to make sure you have your beneficiaries there as well. There's also life insurance on the outside. Make sure you have that right. Another thing we need to talk about is contingent beneficiaries. Don't just have a primary, have a contingent, just in case something happens to you and the primary at the same time. The idea here is we want to avoid probate. We want your money to go straight to the person or people you want to have it. We don't want it to go to probate. And that brings up another thing. If you have non-qualified accounts outside, so this is not retirement money, this is not anything to do with the federal government, you just have a Vanguard account that's got some money in it, you need to reach out and get a TOD. That is a transfer on death. It avoids probate and your money will go to the person on that form. It's basically putting a beneficiary on an account that doesn't normally have one. It will avoid probate and that will avoid a big headache. Also, if you have bank accounts or CDs or savings accounts at the bank, you want to go to the bank and get a POD. That is a payable on death. That's putting a beneficiary form on the account so that it avoids probate. You don't want your beneficiaries to need money and they can't access it because things are tied up in probate. So these are important little things that make a big difference to make sure your plan is done correctly. To go one step further, as we're talking about beneficiaries, You can pick a beneficiary and you can elect them to be per capita or per stirpes. So let's use the example of you have 3 children. You're leaving it to 3 children equally. If you pick per capita, that means you must be present to win. If all 3 kids are living, then all 3 kids get their portion. With per capita, if one of your children predecease you, now there's only 2 children left, they will get 50-50. You have to be present to win. If you pick per stirpes, it preserves that family line. So where if one of your children dies, the 2 remaining kids don't get 50-50, they all get their third, but the remaining family of your deceased child, whether it's a spouse or grandkids, they still get that portion of money. So there is a difference in per capita and per stirpes, and you want to make sure you talk with somebody and pick the right one for you. Now the last of the paperwork mistakes is making sure you fill out your retirement paperwork correctly. Now there's 2 ways you can mess this up. You can just fill out the form wrong, which will just mess up the whole process. You don't want to do that. But you can also pick something that you didn't mean to pick. So you filled out the form correctly, but you chose the wrong selection. You can't do that either. Now there are several big choices you have on your retirement paperwork. What are you going to do with your FEGLI life insurance? That makes a difference. What are you doing with your federal health care? You better pick the right one. Are you doing a survivor benefit? If so, how much? If you're a CSRS employee, you got a lot more choices in that regard. Another big one is the tax withholding. You got to fill out the W-4 form of how much taxes to withhold. You don't want to mess that one up either. Filling out the paperwork is crucially important. Make sure you do this correctly. Now at Retirement Benefits Institute, they have a package available where they can help you fill out the paperwork and make sure you do it all correctly and make sure you understand the selections that you're making. Because with a big bureaucracy like the federal government, you can't mess the page up and just quickly fix it. It's a royal pain if you mess something up. So you want to make sure you do it correctly, but you also want to make sure you pick the correct choices for your situation. Reach out to Retirement Benefits Institute to get help in this way. Now the next 3 problems have to do with planning. And the first one is not understanding the tax consequences in retirement. As you are planning for retirement, make sure you know the difference between gross and net. Don't look at your gross pension and make plans with that. You got to make plans with your net pension. Now similarly, the traditional TSP is a gross number. You need to plan for net. Now if you have a Roth TSP, that's a net number. Make sure you realize that your TSP balance is not all yours. There's a chunk of it that needs to come out of there for taxes. Make sure you plan for that. Here's a smart money list. Not all money is the same money. So if you look here, you can see free money. Obviously, if you have free money out there, you need to take it. And the free 5% match from the federal government is that free money. You have to contribute and get that free money. Next, let's jump over to taxable money. This is just a regular old, maybe investment account, a CD, a bank savings account. It's taxable. If you make money, you have to pay capital gains tax. The tax rates usually are not as high as income taxes, but it's still taxable. Then we've got tax deferred. This is your traditional TSP, your traditional IRA. This is your gross money. You're going to pay taxes one day at whatever the tax rates happen to be for income taxes. Then you've got your Roth money. You've got your tax-free money. Maybe it's some life insurance that you've grown a big cash value in. Not all money is the same money, and so you need to situate your money where it makes the most sense. If you haven't done any type of tax planning, is it too late for you? The answer is no. Reach out to retireinstitute.com, talk with somebody through the options that you have. So the next mistake is not planning specifically enough for retirement. Now, you're going to have your pension, you're going to have Social Security, but a lot of times that on its own is not enough. So you're going to need to save some money. So make sure you're contributing to TSP, getting your match. Now, should you save traditional or Roth? You got to think that through. Do you need life insurance? Do you need the survivor benefit option? Do you have enough money so if both you and your spouse live to age 95, do you have enough? We just recently did a video on how do you know if you have enough that goes through more specifically how you can go through every scenario to make sure you have enough. If something happens to you and your spouse does not make it into her 90s, you don't have enough. As we go through all the different scenarios, if there's ever a scenario where you don't have enough, then you don't have enough. But a lot of times there's things you can do to fix that. If you die and your spouse isn't going to have enough, you can get more life insurance, and that kind of fixes it. So there's usually a variable that we can change to make things work out if it looks like they won't. You may want to get with somebody that can go through these different scenarios with you to make sure that you have enough in all scenarios. The last mistake people make is not getting specific advice from people that understand your federal benefits. Getting generic advice from well-meaning people that don't understand your benefits can be getting bad advice. Now, they can be a certified financial planner, they can have the greatest of intentions, but if they don't understand your benefits, they can lead you astray unknowingly. Your benefits have a lot of great features. Some of the features aren't so good. You need to know which features to take advantage of, and then which features that you want to go on the outside and do something different. For instance, you can't Roth convert inside the TSP. If you want to shift money to Roth, they don't let you. Well, that's fine. You can move the money to an IRA and do that. There's survivor benefit. If your health is terrible, survivor benefit is great. You don't have to get approved. But if your health is amazing, you might want to use life insurance to replace some of it. It is that important to take advantage of all the good things of the federal system, but you want to find a substitute for the things that don't work out as well. The only way you're going to know that is if you work with somebody that understands your federal benefits. There are nuances in the federal system, so reach out to Retirement Benefits Institute. They can do a retirement report for you that will show you your net bring home. They can show you what your TSP balance is estimated to be at retirement. They can show you what your FEGLI cost will be in retirement. And let me give you a hint, it's going to be crazy high. All the different things that you need to focus on, that report shows you, and there's somebody there that can talk you through it and answer any questions that you have. So jump on over to retireinstitute.com, scroll down, and you'll see the 3 different options of different reports that you can get. Jump on over there and get the help that you need. My name is Mel Stubbs. I'll talk to you next time.